Hi there. Welcome back to the Family Fire Mission. This is the monthly income SITREP for July 2026. The Family Fire Mission documents how a single income military family is building a second sustainable income through discipline, dividend, and income investing. The objective is simple: replace earned income with reliable cash flow methodically and transparently. A quick disclaimer before we begin. This video is for entertainment and educational purposes only and reflects our personal experiences. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any security. So starting from the top, we remain in the launch phase with 10 income engines active. Our active reinvestment engines continue to be QDTE, XDTE, and RDTE. Our monthly income for July was $303.89, which leaves us $3,196.11 until we reach our $3,500 per month goal. That leaves us at 8.68% of our goal complete. The 3-month average income growth slowed to 29 cents per month, which gives us a time to target of 10,835 months, or a lot of years. We'll see how that progresses in the future. The gross portfolio value is $21,651, which is $198 more than the end of last month, and our portfolio yield on cost is 18.16%. So because we're still in our launch phase, all of the income has been reinvested back into the portfolio. We have not used any of our income that we've earned this month to pay for any family expenses. Our margin usage at the end of the month was $2,606, which is approximately 13% of the total portfolio value. So looking at our income engines here, so QDTE is the highest earning or paying, I guess, ETF for July at $81.20. And then RDTE was second at $75.32, and then blocks third at $59.51. And then looking back to our active reinvestment one, XDTE was fourth there, $39.16. XDTE is paying significantly lower than QDT and RDTE right now, so this was not unexpected at all. We will continue to grow these 3 positions here, the Round Hill Weekly ETFs, QDTE, XDTE, and RDTE, until we reach our goal investment amount in those ETFs. All right, then we hit our first level 2 milestone here at $300, and so we're at $303.89, so we're working our way to the second level 2 milestone at $350. And then this month we did not have any unexpected changes or purchases to the portfolio. We just reinvested everything back into our active reinvestment engines, QDTE, XDTE, and RDTE. So looking over to our weekly portfolio monitor, here we have, where are we at? Right here. So month of July, the first week we were down 1.12%, and then we went up the second week, or I guess, correction, in that week we were down 0.25%, and then we were up 1.57% the week of July 10th, and then down mid-month 3% during that week, and then up just a little bit the last 2 weeks, which puts us cumulatively from November 1st until the end of July at negative 2.19%. And you can see here how the cumulative return has gone up and down from the time we started this portfolio back in November of last year. So it has not been a smooth ride. It's been a very bumpy ride, as you can see. But we keep coming back around this 0%, which is not terrible, but not great. And our value of the portfolio does continue to increase. So that's good. Good to see that. Our monthly portfolio monitor. So here we are with our monthly portfolio monitor here. Net account value at the end of July, the beginning of August, was $19,058.51, which is about $4,600 off from where we calculated this to be. The total dividends were $303.89. We expected it to be at $394.79, so about $90 off. But you can see here that gap is decreasing. This gap here was decreasing over the last month as well. Looking at the margin, excuse me, the margin interest was $26.47 that we paid, and that's about $2 off of what we expected to, so that's pretty good. Gross account value $21,651, so we expected to be at almost 26,000. We are $4,200 off here. That it continues to get worse as the market continues to stay steady over the last couple months. And then looking at total deposited, we deposited $375 this month, so total is just up $375 from the last month. And then our cost basis rounds out to $20,638 right now. Margin equity 87%. And then total margin that we have used at the end of this month was $26.06. We expect it to be at $22.30, so we're off by approximately $375.75. But that margin does include that little test I was running using the margin to pay off, or pay for rather, the car loan that we had that was $653 a month. So we've done that the last 2 or 3 months, I think. And we will be, instead of a $600 payment, we'll be using it in the month of August to pay for a $300-ish loan payment instead. That way our margin doesn't increase by as much while we continue to reinvest and increase our account value. So hopping over to Snowball Analytics here, up at the top, the value here is a little bit off from the actual. The passive income estimate is a little low from what I think I calculated, but it shows it at 14.6%, approximately $3,160 annually. Total profit is $3,275. Looking at our cruise phase allocations, so goals are on the bottom, current is on the top. So we've got a goal of 45%, currently at 19.87%, and that will continue to decrease until we hit our goal for the launch phase size of the launch phase positions. So these here, the launch phase at the end of this should be approximately 30% of the total portfolio. Currently it's at 45.1, and that should increase as we continue reinvesting into QDTE, XDTE, and RDTE, right? So our DTE funds here should continue to increase pretty close to what we actually want, evening out pretty well. Blocks will decrease because we're not reinvesting back into it. QDTE, XDTE, and RDTE will level out with where they're supposed to be at over time here. Back here, so terminal phase is supposed to be 25% of the total. Currently it's at 49.14%. That's going to decrease as well as we continue to invest into the launch phase ETFs. Moving down here, we are set to average approximately $263.39 over the next 12 months. That is lower than what we've earned the last 2 months. So somewhere in here, Snowball's either predicting a drop or is not accounting for some of the positions correctly. The dividends received so far this year are at $1,772.48. So back in May, we actually passed dividends for the year. In 2026, we surpassed our 2025 numbers back in May. So now we're up $600 from where we were last year. And remember, I started this portfolio back in, I snapped the chalk line on November 1st. So dividend growth, this is good to see here, up, up, up. All right. And then also here, up, up, and then continuing to go up. So December and January, the DTE Roundhill ETFs have significant payouts on those months, and so this is slightly inflated due to those payouts. And then, according to Snowball, we can reach the goal in 6 years in 2032, and we'll see if we can do that a little sooner, but that's what Snowball says. So we will go to the growth here. So compared to the S&P, we'll start with S&P. Over the last month, we're down 1.45% compared to the S&P 500, down up 2.5% over the NASDAQ, and then up 1.28% over the Russell. So in the last month, the S&P funds have done much better than the smaller cap and more volatile tech stocks. So let's look at from November 1st of last year to today. All right, compared to the S&P, we're down 3.84%. Compared to the NASDAQ, we are down also 3.84%. And compared to the Russell, we're down 9.9%. That's interesting that we're down 3.84 for both the S&P and the NASDAQ. But we are down. The relative performance doesn't really change much. It's just a fun thing to keep track of as we continue with our experiment here. So looking ahead to the next month, the plan remains rather disciplined and unchanged. We are going to continue to reinvest in the QDTE, XDTE, and RDTE and try and bump these numbers up. The income will continue to be reinvested completely as we will still be in our launch phase, and we will not be spending any of that money. So this concludes this month's SITREP. If you are following along, the next update will be the mid-month checkpoint in a couple of weeks. Thank you for watching.